Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today I want to welcome you and everybody. Hopefully you had a wonderful holiday season, especially a Christmas Eve and Christmas Day. Happy Hanukkah and every other religious organization. One thing's for sure, December 25th does matter around the world. All right. Let's get into it, because this also denotes when you should have been thinking about in the month of December through December 31st about some tax relief. How can you get it? That's what we're going to talk about in this video, such as selling the shares of stock that are losses. That's a deduction tax-wise. We'll get into 3 of them, ladies and gentlemen. And again, welcome. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. I want to thank you once again for being here. Please share the videos, because you never know who's out here that needs to hear this information. Taxes are due, or filing is due, by April 15th. You can always get extensions, but you should be thinking about it right now, what you need to do. Without further ado, we're going to get right into it, because again, I'll have a link down below to this article so you can go check it out yourself. You have until December 31st to make 3 moves to lower your 2024 taxes, or your 2025 taxes, or your 2028 taxes. It's still going to be the same thing. Why? Because number 1, boost your 401k contribution. You have until December 31st to make 2024 contributions. In case some of you do not understand, a contribution is a tax deduction for you. That's the main thing. All right. Retirement account. 2024 contributions to a workplace. If somebody sees this in 2025, it'll be the same thing. If somebody sees this in 2028, it'll be the same thing. The only difference is there will be additional amount of money added to how much you'll be able to get a deduction for. We're going to get into that shortly, real quick. Now, if you have an individual retirement account, don't sweat it. You can contribute retroactively up until April 15th. That's right. How many of you knew that? That's it exactly. I know you guys are here for a reason. Money you contribute to the traditional, not Roth, plan is shielded from income tax in the year you make the contribution. That means you can subtract any money you put in between now and the end of the year. So it doesn't just necessarily mean December 30th or 31st or by the 31st, anytime from January 1st through December 31st. That puts you in there. All right. Now, this year, you can stash up to $23K in a 401k plus an additional $7,500 if you're 50 or older. That's right. Some of you silver-haired foxes out there, you guys get to make sure you can actually contribute up to $30,000 a year and beyond 50 years old. That is one of the bonuses that you receive. And also, as you guys know, we talk about this oftentimes. Some of you out there are entrepreneurs, business owners. Did you get your business a 401k plan? Make a comment down below. Let me know. Because if you have not, you could be taking huge advantages. And what do I mean by that? I'll just be brief. If I can deposit $30,000 into my company 401k and get a deduction? What happens when my company has in their articles of incorporation and in their 401k plan that I'm signed up into? Matching 2%, 3%, 5%. Did you start thinking of that? Did you start thinking about a solo 401k? Oh yes, ladies and gentlemen, you have options. Come along for the ride. We're just starting. All right, we're just starting now. Here's the other thing that I mentioned in the intro. Harvest losses. A wide variety of investments have done well this year, and if you sell any that you own in a taxable account, such as a brokerage account, you'll owe capital gains tax on your profit. That capital gains could be real estate. It could be stocks. It could be bonds. You're going to owe capital gains, and in case you're not familiar with capital gains, if you hold the asset for more than 1 year, 366 days before selling, you'll have roughly a capital gains of about 15%. If you decide to buy something like, let's say, real estate house, and you do something like it's not your primary residence, and you decide to do something like, well, I bought this house for $200,000, and then I decided, the prices went up and now it's worth $550,000 in 1 year, and I decide to flip and sell it. $300,000 taxable event, ladies and gentlemen. And because you did it under 365 days or less, 25% could go. But that's why you stay tuned to the Stop Struggling Now Network, the SSN Nation, because then you would know that you get tax relief if it was your primary residence just by being a citizen. Up to $250,000 per year, you would not have had to pay capital gains. And it also will depend on if you're married or single. Now, I won't get into that, but they're on to something. Harvest losses, ladies and gentlemen. So whatever is losses to you for an asset, if you bought gold and silver, it dropped. Okay, I'll take that loss. Did I buy crypto at 107,000 earlier in the last, 3-4 weeks, but now it dropped down to 94 or 95 or 98, whatever it dropped down to? It can be, if you want to make that a loss for your taxes because you're making so much money. Those are the type of little tricks that you can do. All right. But maybe you had some losers too. If you sell an investment at a loss, the IRS allows you to use that loss to offset gains and income in a strategy known as tax loss harvesting. That's some of that financial lingo. That's why you don't want to miss the Financial Friday Night live stream at 9:10 p.m. Eastern Standard Time every Friday night. And then Monday and Wednesday nights we have live streams as well. So therefore, the rules can get a little tricky, so it pays to talk to a professional. That is correct. You should always talk to a professional. All right? Offset like gains, anything you've held for less than a year is a short-term gain or a loss. Anything else is a long-term. Okay, well, like I was telling you guys, after that, excess losses can be used to offset the opposite kind of gain. So let me ask you guys something. You guys have heard of a situation where some of the world's most prominent individuals, Elon Musk, Bezos, Trump, where these guys somehow pay only a few $1,000s or less of taxes? Well, see, this is how it happens. If you buy a business, the business loses money. The business loses $500,000. Now you understand they write it off. So therefore, you can carry forward some tax obligations that you would have had to pay. Now you don't, if that $500,000 would have been more than your taxes that you owe. All right. Hopefully that helps. But again, see your professional tax accountant. All right. There you go. So that helps you out. This is what we talk about here because we want money in your pocket. And why do we want money in your pocket? So this way you have more money to invest. Then if your losses still exceed your gains, you can use up to $3,000 of your net loss to negate ordinary taxable income. This is why I say you can start with the articles so you familiarize yourself. There'll be a link down below in the description box on several platforms, such as our SSN Nation podcast. And if you are able to get to our web pages on the podcast pages on iHeart, iTunes, and all that, there'll be a link down below as well. Take advantage of tax credits is number 3. Now, if you've already made or already planning to make some major purchases around this time of year, don't overlook tax credits associated with certain items, such as a new car that you're buying for Christmas that you put a bow on for somebody. How about that home renovation this year, or even going on right now? You can use some of that as tax credits, up to 30%. If you make energy efficient home improvements, for example, you can qualify for a tax credit of up to 30% of qualified expenses, including home energy audits, exterior doors, windows, skylights, and various types of HVAC equipment. Certain monetary limits apply to different types of expenses. Once again, you can find out what those are. But you got Google, you have accountants, CPAs ready to help you. Okay, or say you're one of those people that surprise your spouse with a car on Christmas. Oh my, big bow on it in the driveway. Isn't that what I just said? All right, remember there's a tax credit for buying a qualified electric vehicle, up to $7,500 for new EVs and $4,000 for used ones. That's called tax breaks, but that's not what we're going to talk about today. But buy something because you wanted to buy it anyway, and the credit makes it a better deal. That's the major difference right there. When it comes to these tax credits, you have to buy something that's most often a liability in order to get that. And that's what, if you're going to buy an EV, fine, you get a tax credit. All right. Now, once again, that's all I have to talk about with regard to this today. But I want you guys to be aware. Get your free shares of stock from Robinhood and Webull down below in the description box. And if you want to make investments in 2025, make sure you go to Wealthfront. The link is down below in the description. If you have anywhere from $500 up to $4,999 that you want to invest with Wealthfront, they do 0 management fees until you get to $5,000 or more. Check it out. This is what you're going to need to do in the future. There's no way around it. A debtor nation, a renter nation. If you don't want to be either one of those, then you're going to need passive income coming in, and we try to help here. That's why we have our own WhatsApp group. That's why you can also meet us at the SSN Lifestyle Punta Cana Investors Forum. Why do you want to do that? It's real estate, no credit check, no qualifying, no barriers to entry, pre-construction, new construction on the island. But in this case, it's going to be on the West End, on Punta Cana, or in Punta Cana area, and therefore lawyers, accountant. We talk first to them. So you get the lay of the land, so you understand the country of the Dominican Republic. Then day 2, this is May 13th, 14th, and 15th. Day 2, we're going to go around and check out some real estate projects. Day 3, it's banking. It's all about getting your bank accounts there, because if you do business on the island, you're going to want to have that peso and dollar account so you can transfer money into your dollar account, because you can always transfer it into the peso account easier electronically online. But that is a whole nother video, a whole nother day. But come along and see us and go sign up at ssnlifestyle.com. Right now, ssnlifestyle.com is where you get your tickets. $199.99 to the first 5 people. After that, prices go up. So plan your trip now. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And again, I love you guys, and I appreciate your support over all these years. And I know it's hard out here, and it's about to get a lot harder. Don't fool yourself. Tax cuts, tax breaks, and all the rest of the things that's going to be coming down to help the wealthy, it's going to backfire on the non-wealthy. You guys already know. That's why you can't miss the live streams at night, because we get more into it, because we just don't have 30-minute or 40-minute or an hour live streams. Normally, they're almost about on average 2 hours. And we just did a 4-hour live stream just about a week ago. Not even a week ago. Just about 4 or 5 days ago. So once again, make sure you stay safe out here, because things are about to get wild over the next few years. But you got to put yourself in place to have options. And with all that said, keep your head up, keep moving, and I'm out.